I am going live.
Okay. चलो.
ठीक है.
अच्छा रिकॉर्डिंग भी चालू कर दिया ना आपने? नहीं.
रिकॉर्डिंग नहीं किया. अच्छा रिकॉर्डिंग तो ऑटोमेटिक ऑन है.
नहीं नहीं मैंने पॉज कर दिया एक्चुअली.
But it's not necessary. We are going live on YouTube. तो वो वहीं पे रहेगा. We don't need recording.
चलिए ठीक.
You देख लो. You people ensure that part.
Okay. We can share this YouTube का link also.
हाँ YouTube का लिंक भी तो शेयर कर दिया.
अभी जस्ट मैं हमारे
Let's add. और अभी वेटिंग रूम हटा दीजिए इसके बाद तो कोई ऐड नहीं करना पड़ेगा.
हाँ वो हटा देंगे.
आज तो फ्री फॉर ऑल है.
जस्ट आस्क इफ एवरी जिसका भी रोल है अभी स्टार्ट में इफ एवरीवन इज रेडी फिर ऐड कर दो. नितिन सर रेडी?
आई एम रेडी.
और कौन है इंट्रोडक्शन? सौरभ भाई.
सौरभ भाई इज आल्सो रेडी. यस
ठीक है.
ईस्ट वेस्ट नॉर्थ एवरीबॉडी इज रेडी.
ठीक है. ओके आई विल एडमिट एवरीवन. आई विल जस्ट स्विच ऑफ माय वीडियो फर्स्ट. ठीक है. अरूप भाई गुड टू गो.
Yes. So good evening everyone and thank you once again for joining all of us in this wonderful session. I think we are very close to the year end on 24th of March today. So we are really fortunate to have amongst us Nitin Bhuta sir, who is I think put in a lot of efforts and time into preparing for all of us as to how we'll make the year end finalization really smooth. So I would now directly go to Saurav ji for a brief introduction of Nitin Bhuta sir.
Thank you, Arup sir. Good evening, everyone. So it is my privilege to introduce the learned speaker for the day, Shri Nitin Bhuta ji. Thank you, sir, for being here with us. Nitin Bhuta sir is a BCom graduate, a CW, and a fellow member of Institute of Chartered Accountants of India. He graduated from Mulund College of Commerce, Mulund. He became CA in the year 1992 and in the practice for more than 30 years. Nitin sir secured 13th rank at All India level at IPCC examination. Nitin Bhuta sir is a regular writer of articles which are published in public digital domains like GST PM magazine, Tax Guru, CA Club India, and other leading journals and forums. Sir has successfully completed course on independent director studies conducted by Bombay Chartered Accountants Society, SV Jain Institute of Management Society. Nitin sir is regularly speaking at various esteemed forums such as WIRC, NASIN, speaking for GST certification courses, as well as various study circles in Mumbai and other cities of India. He is one of the panelists on WIRC for resolving the queries on GSTR 9 and 9C. He is a founder member and as well as honorary treasurer for CGPI, which is representing GST issues on pan-India basis. Coming to his exposure, so combined his training as well as his practice experience, sir has got the exposure to various industries like advertisement, entertainment industry, research, pharmaceutical, manufacturing, banking, celebrity management, medical fraternity, and whatnot. Presently, sir is also actively engaged with the limited scale of doing audits, direct and indirect tax advisory, management advisory, as well as handling of litigation matters for renowned corporates as well as big non-corporate groups up to the tribunal level. So apart from the above professional things, sir enjoys traveling a lot across the country as well as to different parts of the country. And today, sir is taking us on a travel to all the important year-end compliances. So great welcome to you, sir, and over to you.
Thank you. Thank you, Saurabh, for kind words of introduction. Thank you, Arup, for giving me the opportunity. Thank you, Rinav, for recommending my name for the session. So let me tell you, friends, Arup and Rinav has given me a strict instructions कि either I should convince all of you or I should confuse all of you. So if I convince each one of you, then the credit will go to them. And if I confuse everyone, then the credit will go to me. So with this, let me start my presentation. Am I audible enough?
Yes, sir.
Okay. So let me just share my screen. Is this visible? Hello?
Yes.
Yes. Okay.
Yes, it's visible. Yeah, it's
Okay.
visible.
So the topic given to me is the whole gamut of year-end finalization. The topic itself is too wide to be covered within a time span of just 2 hours. But I'm determined to complete the session within 2 hours. And I expect each one of you to be present for next 2 hours with me on this particular topic. Typically, all the speakers are going to put the disclaimer in the end, but I will put in the beginning. Whatever I will say, it is my personal opinion. I may be correct or I may be incorrect. I will share as per my understanding. And this presentation is meant only for the educational purposes, and it will be circulated with all the participants. But before you rely upon any of the statements given in the presentations or the deliberations, I humbly urge every member to read the tax law provisions on their own, decide whether whatever has been stated during the presentation is in the right directions, whether it is correct, and if anything is required to be corrected at my end, I would be more than happy if anybody can correct me. And if I give any example and which are similar to your clients, let me tell you very honestly, I don't want to discuss anybody's affairs in a public domain. They are purely coincidental to discuss the topic or to explain the subject. One more assumption which I am making during the presentation, each of the participants who are attending of CGPI and others, I expect each one of them have read the law thoroughly. I'm not going to touch upon any of the discussions on the litigation part, but the concentration will be more or less emphasized on the year-end finalization of the books of accounts of either SMEs or big companies or as the scale may be. And everything that we are discussing, it can be amplified according to the one's requirement. So typically, let me say I'm not here to prove myself today on this intricate topic of year-end finalization, but I am here to improve myself today. The overview of the presentation will start with foundation. I will touch upon GST compliances to the best of my understanding, accounting compliances, income tax compliances, international tax compliances, independent auditors report compliances, ROC compliances, but I'm not touching upon the SEBI and the Ind AS part, PF and ESIC compliances and other compliances. This is the broad contour of the whole presentation. If I feel that I cannot complete the presentation in 2 hours, then I will restrict myself to discuss the certain parts during the deliberation, but I will try to wrap up everything within 2 hours. So let's start with the foundation. What you look at as an image is a chessboard. And typically when we play the game of a chessboard, it involves a strategy to be played by both the players. Here, who are the both players? Client, who has to finalize the books of accounts, And as an advisor or as a government, they will do the ascertainment whether whatever the documents that are prepared by the clients, whether they are correct, true, and fair or not. But in that case, when we are doing any assignment of a year-end finalization in any role that we play, we need to be extremely focused on doing the conclusion of the results that we are drawing from our analysis. So when we look at any particular data or statements or documents, or examine any evidence or any records, we need to ensure that such information is factual, it is empirical, it is true as well as real. It should be properly organized in the presentable form, formulated properly, structured properly, and even as a systematic planning to reach the stage of year-end finalization will play a significant role. Whenever we are doing a review exercise or we are doing the compilation of a year-end, our communication with the stakeholders has to be absolutely crystal clear. It should be intelligible as well as it should be unique. We should have our own USPs of verifications. Our work should stand out before the clients or any stakeholders who are involved. Let it be very specific. And it should be somatic. Somatic, when I refer the word, it is a practical. Especially if we are involved in the process of the year-end finalization, then only we will know what are the challenges or what are the issues that we face and how do we overcome such issues. And whatever the verification that we do, it has to be a pragmatic as well as the implementable. So in case if our team members are involved in the verification of the information or documents, we need to properly train them and we need to ensure that they are focused in whatever they are doing. Typically, when we look at our financial statements, most of us follow the financial year beginning from April to March. And the process of year-end finalization, should we do only in the month of March? Or are we supposed to do it on every month basis? It is our individual call, depending upon the resources, time, efforts, and the compensation that we may get out of executing the assignment. But ultimately, whatever we do the compilation, it results into the drawing of the financial statements. But when we look at the financial statements, we are always need to ensure that they are either true and fair or they are true and correct. What should be the timeline that we should look? Should we look at the daily? Should we look at on a weekly or a half monthly basis or a monthly basis, quarterly, half yearly or yearly? It all depends upon the volume and the complexity of the transactions. So probably if the transactions are reasonable, we may modify our audit program accordingly or verification program also accordingly. But a significant development that is going to happen from 1st April 2023, whereby we need to maintain the digital trail of the accounting records and the data. And such backup is required to be available on a day-to-day basis. And one more precaution to be taken is that once that digital trail is implemented, it should not be possible for anyone to edit such a log or delete any particular transactions. So that is a very, very crucial aspect that we need to keep in mind, because that may be applicable, that is applicable from 1st April 2023. Let me tell you, financial statements typically we deal with the numbers, and numbers involves money part, cash. So it is a foundation which I'm treating that as a earth. I'm using the reference of word swim, which means the water, where the S stands for a source, which can be source in the form of a data, information, statements, and documents. Looking at the complexity and the changes that are happening in the law, the scope is widening left, right, and center. What we think it may not be applicable today, but in future it gets applicable. So the scope is widening, enlarging, and it is becoming more exhaustive. Data integration is becoming a need of the day. Everything is getting interlinked. Even a government dashboard has the information which is insightful, and it is also incisive. Management of data and review plays a very significant role. Mobilization in a timely manner can play a significant role again. But since we know the nature of a business of the client, I assume each one of us will have a mastery about the business model of the client, and we will know what to verify and what we can select and what not to select. And every time our program, what we plan should contemplate how can we improve further. So that is air. Systematic planning, syncretic, scientific, and structured. We may use the computer technology to the best of our advantage, and we should utilize to the optimum possible manner. We need to have a good team, and whatever we are doing in whatever the role, the onus is always us on. And if the client is doing that particular compilation, then the onus would rest with them. But the data needs to be organized in the ordinary form. It should be omnibus. But ultimately, when we look at it from the GST perspective, it is annual return, which we are supposed to file for each financial year. The data that is aggregated has to be accurate, precise, and error-free, which can give the suitable assurance to the parties. What data that is getting filed in the annual returns is accurate. But what we have seen at times, means especially the initial years, 9 and 9Cs were filed in an abrupt manner by many consultants. But now we are in the 6th year of GST implementation. Such error should not creep in. That is my personal opinion. Ultimately, the reconciliation statement to be filed, if it is applicable, we should explain whatever the stand that we have taken in the notes to the reconciliation statement. It should be explicit. It should be extensive also. So what we have to do, there are many people who believe if the exemption is granted for the filing of the annual returns, they don't file annual returns. My sincere suggestions to all the attendees, even if filing of the annual return is optional or deemed to be filed, please file, and because that is the last correction option available with every taxpayer. And that should be exercised very, very vigilantly. Same way, when we are doing the exercise of the year-end finalization, we need to have a fire in our belly to complete the work in a time limits as provided by the law. And if we succeed in doing everything, then sky is the limit for the opportunities to the right people. That is my personal view. So when we look at typically the foundation, the end result, what we see is the financial statements. But now most of the data that has been compiled is digital data in the form of a statement. And anything, first we need to do the supply. And if there is a supply, if there are business transactions that happen under the indirect tax, then any earnings which we earn on account of the economic operations of the unit, it is subject to the levy of direct tax. But to justify both direct tax and the indirect tax, accounting will play a significant role. So if you have trained the staff members of the clients, then probably it will help us in a long run. And many times we have also observed some decisions are taken in the organizations for which why such decisions are taken is not recorded or records are not kept. The reasons or judicial citations or judicial reasoning of taking that particular stand is not kept on the working paper of the client as well as the advisors. In my opinion, that should be maintained rigorously by each one of us, because anything that comes up for an inquiry after 3 years or 4 years, we will not remember what we had done, whether the same accountant would be there or not. But if it is documented properly, it will really help in a long term. Same way, based on the compliances that we do under the direct, indirect, and the accounting records, the way it maintained, considering the other ancillary laws that are applicable to a business enterprise, including the cross-border transaction, we can discharge our assurance function of auditing effectively. And whatever reporting that we are doing, whether by way of a statutory requirements or it is a suo motu reporting, it has to be accurate, concise, precise in the interest of everybody. So that can help for us to disclose everything other than, we may disclose more than what is required by the law to safeguard ourselves in the way we have approached this particular transaction in this particular way. Now let me touch upon the GST compliances. The broad contours of the GST compliances which I am touching upon is the registrations, method of accounting, reverse charge mechanism, peculiar accounting scenarios, reconciliations of outward and the input tax credits, inventories, GSTR 9, 9C reporting issues, interest under Section 50, documentation, invoicing, disclosures, applications, and other compliances. So let's look at whenever we are doing the exercise of a GST compliance, the first and foremost compliance that we should do is to determine the aggregate turnover. Because under the GST, all compliances are invariably linked with the definition and the determination of aggregate turnover, whereby you can decide whether 9 is applicable, 9C is applicable, whether you can opt for the composition schemes and what you got to follow. That will help you. But let's take the example of one particular industry, gold, silver, and diamond jewelers, which I have observed personally. Most of these people flash we have sold so much jewelry in the social media. I will call it as a digital data points, which even a government is aware. And they say we have sold a jewelry of so-and-so value, so-and-so carat size, so-and-so weight size to the various customers. But this particular industry, typically when we look at it, it is the industry operating in the cash segment. And if you look at I'm not talking about the big jewelers, but I'm looking about the small jewelers. who are not even registered under the provisions of a GST law. And when they are doing such a publicity in a public domain, and if we are looking after their compliances in any role that we are playing, first question that should come to our mind, are they required to register under the provisions of GST or not? In my humble opinion, they must register under the provisions of GST. Because if I look at their inventories also, the value of inventory, what they stock in their shops, even if let it be a small shop, 10 by 10 or 10 by 15, the value of jewelry which they are keeping in stock is much more than even a basic threshold limits. We can't even comprehend. And if such is the case, and if any RCM invoices are to be paid by them, since they are not registered, are they required to register because of that? Since they are not registered, they are not showing a turnover of more than 20 lakh rupees. Even a RCM, they will skip, they will not, now the RCM is not applicable because if it is a exempt supply, but they are not registered only, so that always gets missed out. But for example, if they get registered under the provisions of the GST, can they claim a credit of GSTR in their GSTR 3B if they file? Special circumstances under section 18 are provided whereby they can claim ITC on certain invoices based on the provisions as applicable under the GST provisions. But let us take the another extreme example, milk industry, the milk vendors. Typically, milk is not subject to, it is an exempt supply. But the milk vendors are also selling soft drinks, ice creams, and the water supplies, and plus they are recovering the delivery charges. For delivery of the milk, if they are charging delivery charges, it is a composite supply. So still it will not attract the GST. But if they are selling soft drinks and the ice creams, they bound to get registered under the provisions of GST. Similar can be extended to the vegetable vendors and the suppliers also. But let's look at if an organization is providing only exempt services, which are notified under the provisions of GST, in that case, now, even if the RCM supply is applicable, they need not register because of the recent GST Council decisions. Form of advocates and solicitors. If the organization is providing exempt services, they will bill it to such an organization. Advocates themselves are not registered because they are providing the services which are not subject to levy, unless and until they provide another services for which they need to register themselves as per the requirement. But in that case, that will skip the layer collection of a GST for the government. Architect and interior decorators. Again, it's a complete area where tons of monies are spent and it goes unaccounted, especially the residential property. So we need to think, if we are handling such a clients, how to address that particular thing. Let us examine the place of business, which is defined as per section 285, where it is a principal place of business or additional place of business. It may be registered, it may be unregistered under the registration certificate. Job worker, place of business, registered or unregistered, branches, division, registered or unregistered. But when we are doing the year-end review, we should always check what we are reporting in ITR, MCA, shop and establishment, and other labor laws as applicable. What is the information that is reported in the branches, tax audit reports as well as the ITRs? For example, if they are unregistered under the provisions, they have not enrolled the place in the registration certificate, can we claim the input tax credit if they have procured any particular supplies? It can be claimed because whatever the activity that particular the organization is doing, they are paying the outputs for it will create the litigation, but it can succeed. But ideally, I always recommend people to register each and every place in the RC. That is my personal opinion. Let's look at the another example of a renting of a property, which is a renting service. And if the person is registered in Mumbai and he has a property in Chennai as well as Delhi, will he be required to register in Tamil Nadu as well as Delhi, since he is giving that property on rent to somebody? In my personal opinion, if I look at the series of sections and read simultaneously section 9, section 5, section 7, 12, 271 place of business definition, in my humble opinion or in my considered opinion, he need not register in Tamil Nadu as well as Delhi, if it is only pertaining to the renting service of a property. But if he is carrying on as a place of business as defined under 285, then he has to register. That is my personal view. Again, challenges do arise on account of the registration numbers which are cancelled, revoked, suspended, or situation arising on account of the inheritance by the legal heir. Typically, ITC 02 needs to be filed. But here, in my view, as per Rule 23, whatever the GST returns are to be filed, time limit to file that returns of 30 days will start from the day registration certificate is revoked, and there are many judicial pronouncements to help on that particular point. So that care has to be taken if such situation is applicable for the financial year 22-23. Method of accounting. Typically, we know two kinds of method of accounting: mercantile or a cash system of accounting. It can be either inclusive or an exclusive method of accounting. So typically, what should we follow? Under GST, everything is mercantile. But certain categories of the taxpayers, if they are following cash system of accounting, then they need to comply the provisions accordingly. But here the moot question is key. Even whether I follow mercantile system or a cash system, should I go for an inclusive or an exclusive method of accounting? Most of the people would be following the exclusive method of accounting. Here I would like to park one food for thought for every participants. A certain GST set off is not but permissible because of the block credits. And if I am following the exclusive method of accounting, since it is disallowed under GSTR 3B, we will debit that particular GST in the profit and loss account. Can we claim that as deductible under the income tax provisions? Just a food for thought. Look at the related party transactions, which we are reporting under AS 18, or we are reporting under 48(2)B. But related party, as defined under the GST provisions, is much wider as compared to corporate law or under the income tax law. Transactions needs to be done at the arm's length pricing. And if it is not done in the arm's length pricing, then we need to see, can we take a relief by way of a proviso 2 to 6, Rule 28. Whatever the adjustment that we do under the domestic transfer pricing or international transfer pricing or customs valuation, that will have some bearing on the reporting aspects. But if we are doing for the customs and if there is a IGST is involved, because typically for the imports, IGST will be involved. So that will have a bearing on the GST compliances. But domestic transfer pricing or international taxation pricing under income tax will not have any bearing. Again, what valuation we are doing for the purpose of the financial statements has got no relevance as far as the GST compliances is concerned. But if there are issues in the valuation as per section 15 and rules thereunder, then that will have the bearing on GST compliances. And based on that, eligibility of ITC under section 16 is governed. Ideally, if it is done at the arm's length pricing, then everybody is safeguarded under every law that is applicable to the enterprise. Since now it is a season of the bank audits, I'm touching upon the banks specifically. Typically, bank appoints a lot of advocates for doing a lot of work for the purpose of creating charge or doing the due diligence or something. And they recover such monies from the borrowers and they debit directly to the borrower's account, and borrower typically would debit such expenditure in the bank charges account. So, for example, for such a legal services, if the advocates are involved, who will bear the levy of GST? Typically in banks, legal and professional charges will not appear as a part of the expenditure because it is always debited to the customer's account, and in customer's books of accounts, it will be debited to the bank charges. So who will pay the GST, RCM on legal charges? Whether bank will pay because the advocate has billed it to the bank and in bank has debited to the customer account. So looking at the documentation, if the advocate has billed to the bank, then bank should pay the RCM under the reverse charge. And if it is in the name of a customer, then customer will pay invariably and claim the input tax credits as applicable. Or if the ACZ in the International Finance Service Centers supplies, if the manpower services are provided to them, will it be treated as a zero rated supply? Or such services would be treated as a supply subject to RCM, but for SEZ, it will be treated as a zero rated supply, and such person can raise the invoice under the LUT. Another example, if the taxable person has imported certain materials and in future, say after 2 years, there is an issue of valuation, and due to the proceedings, after 2 years, IGST is payable by a taxpayer, and such a RTP pays that IGST also, provided that proceedings are carried out under section 73 or 74. Let us assume that it is done under 73. So if I'm paying IGST liability through DRC 6, can I claim the input tax credit? In my understanding, ITC can be claimed under, if it is paid under 73, and ITC will be eligible. The another logic is for imports, 16.4 limit is not applicable, but it is based on the self-invoice also. But here, if there is a valuation difference, we will not have the bill of entry when there is a issue arises after 2 years. But based on DRC 06, we can report the transaction appropriately in GSTR 3B and claim the ITC. That is my, but interest payable would be the cost to the taxpayer. Let us take another example. If a company A located in United Kingdom has awarded a contract worth rupees 50 crores to company B located in India for providing the services. But due to some genuine reasons, company B is subcontracting work to the two different companies, company C, which is located in Singapore to the extent of 20%, and company D located in Australia to the extent of 10%. For the purpose of the clarification, all are unrelated parties. So what happens to save the foreign exchange cost of the remittances? It is agreed between the parties. As per in the document executed, company A would pay 70% to company B in the convertible foreign exchange. Company A also would pay 20% to company C in Singapore in convertible foreign exchange. And it will pay 10% to company D in Australia in convertible foreign exchange. So here the question arises. If a company B has filed GSTR return and reported the transaction in GSTR 1 for 50 crore rupees, is it correct? Whether the conditions of convertible foreign remittance are satisfied as notified under section 26, or do a company, that is company B, issue credit note to the extent of 30% by issuing in the name of the company while filing GSTR returns? Hopefully the time limit of 16(4) is not over. But if that is not possible, do we have any exposure of the RCM on company B for payments made by company A to C and D? And for this such a situation, there is a clarification issued as under the circular of 78, which is issued on 31st December 2028, which has provided if the approval is sought from the Reserve Bank of India to remit the monies outside India, in that case, it would be treated that company B has satisfied the conditions of receiving the money in convertible foreign exchange, and they will claim all the benefits as are applicable on this exports as per section 26, but they will pay RCM in respect of the payments made to company C and company D. This is, we are talking about the convertible foreign exchange. But let us, this transaction has been executed and the monies have been received in December 2022. But that is received in the Indian currency rupee Vostro accounts. So now there is no convertible foreign exchange, but the money is received in the Indian currency rupee Vostro accounts in December 2022. So will anything change? The answer is from November 22nd, 2022, RBI has issued the master circular under subclause 7, whereby they have permitted international trade settlements that can be done in INR. So if the money was received prior to 22nd November 2022, then it would not have been termed as an export of service. And in that case, if once it is not treated as an export of service, consequences would follow as applicable, whether it is either under LUT or under the IGST payment, as the case may be. But since the payment has come in December 2022, conditions of 2.6 are satisfied and it will be treated as an export of service. Let us take the example of a real estate industry. Everybody knows the real estate developers who have opted for a new tax regime, they got to procure 80% supplies consisting of inputs, input services, or capital goods, as the case may be, from the registered vendors. But their major cost in a small builders, typically, if you look at in that particular industry, the major cost that they pay is the interest on monies borrowed from the small individuals or on small firms. And we know the interest is an exempt supply. But if they are not registered, if that is the case, will they pay a GST at the rate of 18% on such an interest cost? What typically one should do is that most of the builders are doing, they are making every person get themselves under the provisions of GST. They are filing the exempt income details so that that is considered as a part of the exempt supply and it is considered as a part of 80%. Another very issue of the TDR valuation on account of the area sharing, corpus, alternative accommodation arrangements, shifting allowances, or any other emolument. How do we determine? That is another area in the real estate. Occupation certificate, if it is received either full or in part, or is a project wise, and that particular point of time, whichever the event is earlier, GST would be payable by the builder developer. Another major component of the expenditure is the municipal permissions. Will it be subject to RCA? Typically, we are taking a view if such services are provided by the municipal authorities under Article 243W, and thus they are not subject to levy. That is my view. But again, a burning issue in the industry, in case of the society redevelopment, whatever the free area is allocated to the existing members, on receipt of occupation certificate, two builders required to pay RCM on account of the TDR. That is, but there is no clarification as yet. I hope some clarification flows in. So that issue will arise in future for sure. Some of the peculiar accounting scenarios, issue of debit and credit notes. It can be applicable either for domestic import or export. But if we are issuing any kind of a debit notes or credit notes, we need to have the relevant documentation in place to justify that they are factual, and because of the situation arising, they are issued. It may be on account of the rate difference or on account of the sales returns, quantity difference. But what happens if I issue the debit or credit notes beyond the time limits permitted under Section 16(4)? In that case, we can always issue the financial credit note if it is possible. But here one challenge that is faced, if it is a financial credit note, and if you have claimed the input tax credit, then that reversal issues will come. For service industry, if a service is provided, can we issue the credit note? It can be issued only if there is a deficiency in service or there are some justified reasons. If you cannot justify the reasons, then the credit note technically cannot be issued for the service industry. For example, take our industry. Chartered accountants providing the audit services, raising an invoice of 1 lakh rupees, and client negotiates for 50,000 rupees. Can we issue the credit note of 50,000 rupees? The answer is no. Answer is no. That is my personal view. But most of the chartered accountants would raise the invoice only when the payment is received. They don't follow the time of supply provisions at all. And there can be another reasons. Trade samples, most of us are aware, circular number 92, if I recall, that will give you the complete guide what is to be followed. Free samples, very interesting point of discussion. If I am doing the exports, and this has been discussed in one of the seminar which I attended, which I'm just discussing here for everybody. It can be treated as an export because the supply is considered as a zero rated supply. And we know that even if it is a tax-free supply or a zero rated supply, input tax credits can be claimed as per the provisions of section 16, read with section 17 as applicable. But for the imports, if we are importing as a free sales samples, IGST will be payable. And that analogy cannot be accepted in case of the exports. That is not possible at all. That is the fact which we should keep in mind. Imports is subject to levy of IGST. Trade discount will be always in the invoices. Cash discount would be termed as a cash transaction of money. So that cannot be subject. It's not a supply itself. Quantitative discounts, typically if we are offering 1+1 schemes to our customers, typically what we suggest to the client to adjust the pricing when we are raising a tax invoice under section 31, so that no issue arises, of no question of any reversals or anything. Though it is a sales promotion, whenever the pricing is decided, it is structured in such a way that there is no loss to the client. Notice pays and trade damages, circular 178 has said that they are not subject to levy of GST. Subsidy, if it is received from the government, either revenue or a capital, it is not a supply, it cannot be subject to levy of GST. But if it is received from anybody else, then it will be subject to levy of GST, either revenue or capital. And if it is a revenue, it goes to your revenue account. If it is a capital, it goes way of a reduction of that particular capex. But here the question is, if a government has provided revenue subsidy or a capital subsidy, and due to oversight, if they have deducted the TDS on such a subsidy paid, which would reflect in your way of form number 26As, can you take a stand? Such a transaction or such a supply is not subject to levy of GST. In my humble view, or in a considered view also, substance of the transaction don't change. You may seek a certification from the government. It is a revenue subsidy paid. It is not a supply. And thus, and that remark you can put in your 9 and 9C as the case may be. Exempt supply. If it is a domestic 100% exempt supply, we need not register. Notification number of 5 of 2017 holds. But if we are doing a exempt supplies which are exported, in my humble view, if that is the case, one should always register for GST and export under the LUT. That is my way of handling the transaction. Secondment of employees. Reimbursement can be subject to GST. It is a disputable thing, but I agree it is subject to levy of GST. Reimbursement of expenses. If any kind of a reimbursement of expenses are claimed by the taxpayer on account of, say, hotel tickets or air tickets, and if they are issued in the name of a registered taxable person and he's taking us recovery from the client, then please bill with the GST and you may use the same HSN code or SSC code as applicable for providing a service. But here one fact to be carefully considered. Please examine the place of supply for each reimbursement of expenses. For example, if employee is traveling to London and he is claiming a reimbursement of a hotel expenditure for staying in London, in that case, the place of supply is outside India. So it will not be subject to levy of GST and you need not pay the RCM also in such a case. Wherever we can support pure agent conditions, then they are not subject to levy of GST, but we should raise the debit notes as applicable. Renting a property, if it is a residential property, it is exempt. Again, if the residential property is shown as a person who is carrying on the business, but the agreement for giving the live-in license or a lease premises indicates it's only for the purpose of the resident. But if you are showing that as business place, then you will be liable to pay the RCM as per the notification issued in July. But whether you will be able to claim the ITC under section 16 or not, that is I am doubtful about it. But the same way, if there is a commercial property, an employee has given such property to the employer on a rent, he will charge on the forward charge mechanism by getting registered under the provisions of GST. Don't mix, though he is an employee, his remuneration falls under the excluded categories. This will not serve the purpose. Even a director will be on the same analogy. Director will always bill under the forward charge mechanism if there is a property given. The reason is director is not providing services in his individual capacity. He is just renting the property. Now look at some of the reconciliations of the outward supply. It can be done on a monthly basis, quarterly basis, half-yearly basis, or yearly basis. GSTR 1 vis-a-vis books of accounts, 3B vis-a-vis books of accounts, 1 vis-a-vis 3B, books of accounts vis-a-vis GSTR 9 or GSTR 4 or 9A as the case may be, books of accounts vis-a-vis GSTR 9C, especially the challenge in reporting of the HSN or service accounting code reporting in GSTR 1 and 9, but now it is mandatory. But here the question comes, under GSTR 9, we are compulsory required to report under table 17 and table 18 there is an exemption. Will such exemption continue for the financial year 22-23? We got to wait. Again, whatever the HSN codes that are reported in the e-way bills, are we reporting same, or if there is an error in reporting of the HSN codes or service accounting codes in the tax invoices that we are receiving or we are giving, can we correct such a information in GSTR 1? In my personal view, if you have used the wrong HSN code or a service accounting code, you can always correct the information while filing GSTR 1 and report correct HSN in GSTR 9. TDS deducted under section 51 or TCS collected under 52 again also needs to be cross-reconciled with the supplies made and needs to be reconciled with the books of accounts. Books of accounts vis-a-vis the ITR, vis-a-vis GSTR 1 and 3B and Form 26 AS. Tax audit reports again needs to be correlated. If the transfer pricing report is applicable, then 3CEB again with the other returns, ROC annual returns. If it is a listed company, then data needs to be reconciled with the published results also. Whatever is reported in the independent auditor's report, that is also to be correlated. Whatever the information is reported about the billing, income from operations, needs to be correlated with the director's report. But here one challenge that would arise, if there are multiple branches or division, same exercise has to be done for each branch and each division as the case may be. We may be having a transfers between the branches and division, or we may be adopting cross charge, or we may be following ISDs. All that needs to be properly reconciled. It is a very significant exercise to be done. And if any deviations are there from 1st April 22 to 28th February 2023, any deviations that you can come across, you should give that impact while filing the return of March 23. That is my personal view. If there is a overseas branches and division, or if there is a subsidiary, then probably that may not have any impact on the local registrations. But when we are doing the reconciliation of a 9 and 9C, that reconciliation has to be taken into considerations. Let's look at the inwards. GSTR 3B we are claiming, we need to reconcile with books of accounts. GSTR 2B vis-a-vis books of accounts. Now most of us must be claiming as per GSTR 2B only in GSTR. But here one question that arises, if some supplier has issued the invoices to us, we are accounted only in our books of accounts, but they are not reported in 2B till 30th November 2024. 23, sorry, it is a typo error. I will correct it in my slide to be shared. So what should we do? What option we are following? Is we are showing as a ITC availed in GSTR 3B. In fact, we do that exercise in the month of March itself, so that we don't have to report in the subsequent year at all. And we immediately reverse in GSTR 3B. That policy what we are following. Reconciliation of 3B and 2B claims. But if you are claiming as per 2B and that is getting auto-populated in 3B, but again, care should be taken to whatever the transactions that are reported in 2B, whether they are recorded in the books of accounts or not. Typically what happens, directors of the companies or employees of the company have a habit of registering GST number of the company for their work, but that expenditure may not belong to company at all. So we need to have the suitable documentation maintained for such a scenarios. If we are reporting the input tax credits in tax audit report, then we need to reconcile with 3B accordingly. Beyond time limits, if you follow the process of availing in your GSTR 3B and reversing, then probably you will not face the issue of 16.4 limits if your books of accounts are accurately maintained. Again, you are claiming the ITC without satisfying the condition of section 16. It is better you reverse them as per because the new rule 37A, which is applicable from 26 December 2022, you follow it. If it is, you reverse it, because otherwise the issues arise. But again, e-invoicing is applicable, but many of the people have issued the tax invoices. Will it be treated as a valid invoice for the purpose of section 31 And for the claim of input tax credit under Section 16, it is a litigative issue, though proviso to Rule 36(2) provides some support, but the waters are yet to be tested. Whether what will happen in the future, that the time only will tell. RCM. Whatever we are paying RCM on account of the imports of either goods or services, there is no time limit. Time limit of 16(4) don't apply. Customs valuation we have already discussed. But here, I would like to tell you if the custom valuations issues are arising and the notices are issued under Section 74, then that ITC will not be admissible. But if it is issued under Section 73, then you can claim, because if you look at the Section 17.5.1, 17.5I, it refers to only 3 sections, 74, 129 and 130. So that you can take a call and you can take a defense as per Rule 36(3). To be vis-a-vis books of accounts, 2A, e-way bills, RCM reported in GSTR 3B vis-a-vis the table 6 bifurcation that we report in GSTR 9 can be correlated. I will discuss one angle after I complete this slide. Here, cash and credit ledgers, as we maintain on the GSTN portal, should we maintain the merged GST payable account, or we can maintain the independent? That is a call of an individual person. I prefer, if it can be for a smaller entities, merged can be maintained. But if it is a larger entities having a substantial transaction, separate independent accounts are maintained. That will be better. And one more thing, electronic cash ledger balance as on 31st March 2023. If it is a corporate entity, please show it as a cash and cash equivalent in the financial statements. That it should not be considered as a, because till you offset the liabilities in while filing the returns, it is not considered as offset, so it will be treated according. So bifurcation in GSTR 9 is mandatory into inputs, input services, and the capital goods. GSTR 3B need to be correlated with the ITC that we are going to report in table 12 and table 14. GSTR 3B versus capital goods ITC vis-a-vis the refund claimed under 54 to be examined under lenses. If you have claimed the input tax credits on the capital goods, when you are reporting the information under the tax audit report, clause 32, whether you have reduced, shown as a reduction of the input tax credit in clause 32 of the ITR, that is to be seen. Another very classic entries, bill of entries issues. We have recently came across a situation that goods were rejected by the party who imported such a goods and they are auctioned. So, one second. What happened? They issued the tax invoice to the customer who bought that particular goods. In that bill of entry, they quoted the GST number also. But while filing their GSTR1, they reported that as a exempt supply. And they said, because of since it was reported as an exempt supply, it did not appear in the GSTR2A or 2B of the person who bought such a rejected goods. When we argued with them, we told them, since you have issued tax invoice under Section 31, you should report as a B2B supplies. You cannot report that as an exempt supplies. There was a big dispute, but this was happening very significantly. And there is another situations also. Bill of entries are issued, parties have made the payment, they have not issued the tax invoices also. And such credit is not reflecting in the I get credits also. So these are the issues which may come across when you are examining the imports of goods, especially in case of the rejected supplies. If there are no e-way bills, can we claim the input tax credits under Section 16? Provided our documentary evidences support of rest of the documents are available properly, you may fight the matter. But if, again, tax, if you are paying under 73, you can claim, but under 74, you cannot claim. This is the reference. Reversal under Rule 37. We know if the consideration is not paid to the supplier within 180 days, then we need to reverse. And if we have claimed and utilized, then we will pay the interest. But especially if the supplier is the MSME supplier, we got to see if there is an agreement, then the maximum credit period is 45 days. And if there is no agreement, the limit is only 15 days. And if you are paying beyond 45 days to MSME vendors, then also interest is payable under Section 23 of MSME Act. So in that case, you can claim the input tax credit, but that interest will not be allowable as a deduction under the income tax provisions. Records of reversals of input tax credits in GSTR 3B, 4B2 and reclaim has to be properly maintained for each month so that we can justify that if any inquiry arises in future. And whatever the input tax credits that we are claiming, please keep in mind how will you compile the data vis-a-vis the clause 44 requirement reporting in form 3CD of tax audit reports ITR that is to be done. And this is also to be done for each branch wise, because for every branch and division, you got to file 9 and 9C if that is applicable. Even if the operations are only for one day or there are no operations also, then 9 and 9C is still to be filed. Again, this is for the consideration, and Rule 37A, which has been introduced from 26th December, which talks about if the supplier has not paid, then you will reverse such a transaction by 30th September of the next year. So financial year 22-23, you will reverse such a transaction by 30th September 2023. Ideally, if you come across such a case, try to reverse that transaction in March itself so that you save in terms of the interest cost, if it is possible. And 30th November is the last day. But look at the changes. These changes have come from, in Rule 37 has come from 1st October for the proportionate reversal of the ITC. And reversal of non-payment of tax has come from 26th December. Does it mean it is one more reconciliation for everybody? Good for thought. Stock in hand. It can be in factory, shop, godown. It can be of raw material or finished goods, work in progress, stores, space, goods sent on approval, supply in transit, supply sent to job worker, supply at custom bonded warehouse, supply without invoices, stock supplied but not accepted by the customer. Do we have such kind of a breakup? Technically, there will not be anything. If you do a verification, books may show some other results and actual stocks can be different. So we got to investigate the reasons when we are doing the year-end finalizations. Again, whatever the inventory that you are reporting, you will cross-verify with the information reported in the annual financial statements, reporting in the ITR, quantitative details, tax audit report. If you have reported the issues in CARO, then you got to correlate. How will you address? What are the qualifications raised in CARO? Because that is also monitored very significantly. If there is a inventory losses and its accounting treatment in GSTR 3B properly needs to be documented. If there's a loss by fire, then if you are making an insurance claim, then if you have claimed the ITC, then insurance companies are asking for the certificate for the reversal of the ITC. And if you are not claim the input tax credits, then the claims will be settled accordingly. So you've got to treat. If the stock is consumed by the owners or partners, then even that is to be examined and the proportionate reversal has to be done. Stock valuation, whatever you do in the audited financial statements, has got no bearing unless and until section 15 is applicable. But again, small business houses which are opting for the presumptive scheme, they are saying we are not maintaining the books of accounts, but you are issuing the e-way bills, you are reporting the details of the supplies made in GSTR1. Can you take that stand? Food for thought. GSTR 9 and 9C reporting. Incorrect reporting of the outward supplies in GSTR table 4, 5, 10 and 11. Again, ITC in table 6, 7, 8, 12 and 13. Tax payable in table 4, 9 and 14. Incorrect reporting of HSN in table 17. Non-maintenance of records. Can we take that claim anymore? But if it is a, say, retail store having a 50,000 items, you may not be able to report all 50,000 items. What you should do, at least for the purpose of the filing of GSTR1, majority sale that you have done, at least that reporting should be done in GSTR9, so that you don't face an issue in uploading, and rest all the details can be filed physically before the proper officer. Incorrect reporting of turnover in table 5 and 7, ITC. Tax payable, again, interest and penalty. If interest is payable, we should always report invariably. This is to be done for every branch and division. Overseas, branch and division will not have much of a repercussions, only it will be item of reconciliation. Interest payable, short payment or incorrect payment of the output tax liability. If you have incorrectly availed input tax credit, availed but not utilized, then interest will not be payable. But you have availed and utilized, then the interest would be payable. So you got to be very clear about your facts based on the records maintained vis-a-vis the electronic credit ledger and take a call if it is applicable. Let us take one more example of the documentation. There are 4 parties to the agreement: Party A, Party B, Party C, and Party D. And the agreement is for the providing the services. Party A is the ultimate beneficiary or a recipient. He can be either located in India or outside India. Party B is a service provider, actual service provider. And Party C is the exclusive agent of Party B. And Party D is either agent or a payment conduit. And the terms of the agreement provide that Party C would raise an invoice either on Party A or Party D, as the case may be. And supplies made either in India or outside India. Let us examine this in India. Outside India, we will touch upon little later. Can a Party C raise an invoice on Party A and D? I don't see any challenge. If it is properly documented, it can be done. If the invoice is raised on Party A, can it be termed as an export of service? If the agent is raising an invoice, in that case, to prove it as an export of service would be a challenge, because Party is not the provider of the service. That will be one challenge that would be faced. Can a Party A and D claim the input tax credit? If the document provides, it can claim. Export, domestic supply, that can be done. Export, I will come little later. But here, if the party is acting as an agent, Party D, can they deduct the TDS? If the agreement provides key invoice to be raised for party A on party D, then, and if the invoice is raised to party D with the GST, they can deduct the TDS. But if party D says, I am acting only as a payment conduit, in that case, they cannot deduct the TDS under the provisions of the Income Tax Act. But let's look at the other way around. If it is a transaction of outside India, it will not be treated as an export of service. Probably one can look at the executing the agreement between party C and party A, and there can be independent agreements between C and B. That can be worked out. And accordingly, the transaction can be structured in the interest of to minimize the tax burden. Invoicing can be tax invoice, normal invoice. Normal invoice is not applicable if you are a registered person. But if it is an unregistered vendor, it can be a normal invoice. Bill of supply will be a composition supply. Rate of tax before, after, subsequently, entry in the books of accounts as per section 10. Cross charge as the valuation issues. It's a big challenge. If the supplies are not crossing the custom borders, especially the goods, then it will be treated as a domestic supply and it will be subject to levy as applicable, either IGST or CGST, SGST, as the case may be, depending upon who is the receiver. But especially very important thing to be kept in mind for the year-end closing invoices, especially in case of the services. If the documents or a purchase order or service orders provides for the raising the invoices before 31st March, then they should be billed in the month of March, should not be delayed, provided time limits are available. So one has to see the documentation and based on that one should take a call. But take an example of the goods. They are sent on 28th March 2023. They are delivered on 5th April 2023. But the client has rejected on 15th April. How will we report in GSTR 1? Typically, if it is a 15th April, it is rejected, the person must have filed GSTR 1 either on 11th or 13th as the case may be. So once the supply is reported in GSTR 1, it will auto-populate in GSTR 3B on 14th. So in that case, we know it is rejected. So when should I wait for giving the effect of credit note in the May returns, in April 23 return, or should I show the reversal when I'm filing GSTR 3B of March 23? In my humble opinion, if such situation arises, show that reversal only in the month of March 23. Don't wait for April 23. That is my personal view, because you will save in terms of the outgo. And if mismatch notice is received electronically, you can always explain this is a fact. Because the goods are rejected, so there is no transfer of ownership legally, and stock belongs to that person only. Unbilled revenue have a sound basis of tabulating this value and determining the unbilled value. The refund applications applied and rejected. Show cause notices with demands notified. Recovery notices under section 79 in DRC 13. If you come across such a situation, appeals pending adjudications, taxes outstanding to be paid as on 31st March 2023. Very, very significant. If you have not paid taxes, typically it may attract the disallowances under 433B, but under GST law also now, you don't file particular month return, next month return is not permitted, or particularly for GST that issue don't arise. Merger, acquisitions, demerger, spin-off, slum sale and inheritance. If that situation you come across, properly verify every document, court orders, and treat the transaction appropriately in your books of accounts. GTA was supposed to file their option by 15th March, which is over now. LUT applications to be filed for 23-24. But if you have missed opting for a LUT of financial year 22-23, you can still file it today also. FIRC reconciliation will play a significant role, especially if the GST refund reconciliations are applicable. E-invoicing, if applicable from 1st April 2023. One more point to note, if the aggregate turnover is more than 5 crore, then 6-digit HSN code is mandatorily to be reported in invoicing also. Otherwise, invoicing will not be generated. We need to start with new invoice series. It can be, you may have a multiple invoice series. There is no restriction as far as that is concerned. GSTR 4 annual return to be filed in the next applicable due dates. Your frequency to be selected for QRMP based on your choice. This year, Tran 1 and Tran 2 credits claimed will auto-populate in your GSTR 9. So that documentation verification, then the orders needs to be seen. Rule reversals 37 and 37A, that is to be seen, especially in case of the creditors outstanding as on 31st March 2023. Very important, ITC reversals of 42-53. Let me spend some time on the sale of our fixed assets. If fixed assets are sold, which are more than 5 years old, then that 5-point basis is not applicable. But if it is less than 5 years, then we need to compute what is the ITC reversal required on account of the capex. And we need to compare vis-a-vis the GST payable on the sale value of a capex. So for take an example, if the sale value is 1 lakh and GST payable is say 18,000 rupees, and reversal to be done is say 25,000 rupees. So typically, many of the members would reverse 25,000 in GSTR 3B on account of the rule 43. But what happens to that 18,000 that you have collected? Even that would be payable. Please keep that in mind. Even that would be payable. Ideally, what they should have provided, the difference should be paid, should be reversed. What you are paying, that should be reversed. But right now, whatever the provisions say, you are paying both, reversal as well as this. But one more challenge. If fixed assets are discarded, so it will become a Schedule 1 supply. You got to do the reversal if it is less than 5 years, for which you have not received the consideration. Even that angle has to be examined very, very closely. And that too, you got to correlate with the data reported in your ITR as well as the company's financial statements. Other reversal on account of the input service distributors or a block credits closely to be monitored. Job work. If aggregate turnover is less than 5 crores, then ITC 0 to be filed on a yearly basis. If it is more than 5 crores, half yearly. Bill of entry reconciliations to be reconciled with GSTR 3B, as well as whatever you have reported in the director's report and the notes to accounts. If any additions of authorized signatory to be done on the portal, that should be done. Any other compliance not listed above. Coming to part of the litigation documentation, please keep a trail of all the notices and replies filed with the reasoning, with the judicial supports and the opinion, synopsis of the issues flagged, status of litigation proceedings, blocking of ITC under Rule 86A, recovery proceedings under 79. So with this, we touch upon now on the accounting compliances. Now I'm going very fast because this most of you would be aware. Digital trail is to be implemented from 1st April 23 and data backup should be available on a daily basis. And Auditor will report if that is there are some lacunas in the digital trail, that is to be reported in the auditor's report also. Year-end provisions in the prepaid expenses accounting, provision for gratuity or actual valuation as per AS 15, provision for taxation, MAT or AMT working as the case may be, unbilled revenue accounting with documentation properly to be kept on record, verification of capital expenditure vis-a-vis information reported in Section 32 Companies Act Depreciation Schedule, GSTR 3B, as well as the information filed in the refund applications and reported in GSTR 9 also. And table 14 of 9C, TDS provision as on 31st March 2023, PF ESIC provision as on 23, related transactions for the purpose of reporting, provision of audit fees, very, very important, or advisor fees, whatever the case may be. Whether tax audit is applicable for the financial year 22-23, that is to be seen very closely. Aggregate turnover for filing of 9C. Cash flow statement, inventory verification and valuation as on 31st March 23. Financial statements disclosures. Bank DP statements, if there is a working capital or a cash credit facilities are taken, please reconcile. And if the CARO is applicable, then even it is to be correlated with that. MSME disclosure reporting. RCM levies remaining to be paid for the financial 22-23. Debtors and creditors aging to make a provision for debit notes and credit note as the case may be. If there are any credit notes to be issued for the financial year 22-23, try to issue before 31st March 23 and report in GSTR 1. That is what the strategy we follow. Directors reports data reconciliation. Income tax compliances. Prepaid taxes reconciliation, advance tax, TDS, TCS, AIS and TIS. Form 26, AIS and TIS reconciliation vis-a-vis the income, turnover reported. There are many people to whom section 194Q or 206 1H is not applicable. They are still collecting or deducting the TDS, which is a wrong practice, which should be avoided because they want to show that our turnover is more than 10 crore, which is not correct. Disallowances as applicable and on account of the payments made to non-residents or domestic parties. 43B, section 37, especially explanation 3. Reporting of disallowances of the cash payment, but now most of the payments are done through electronic media. So cash payments we got to see very closely. Cash book can be examined very closely. Related parties. If you are claiming any deductions under chapter 6A, please see the documentary evidences under lenses. If you are claiming any exemptions under section 10, please see whether you are eligible for or not. If there is any exposure to the unexplained family of sections 68, 69, 69A, 69B and D, please examine very closely because it has got a very heavy ramifications. If it is a partnership firm or LLP, then the interest and remuneration payable to the partners, their disallowances to be checked. Which ITR forms to be filed, closely verified. If you have received any intimations, 143, we get it now very fast. So that is to be considered. If there is a assessment issues or appeals are filed, then that is to be seen. Ratio alliances, analysis and compliances other than above to be done compared with the previous 2 or 3 years as the case may be. If there are borrowings or transactions in cash, then that reporting, how will you report if the tax audit is applicable? That is to be seen. PF and ESIC dues, if they are not paid within the time limits, then it will attract the disallowances under section 36. And that is to be reported in clause 20B of form 3CD. Clause 43B disallowances of clause 26. If you have sold the properties, then 50C exposure to be seen. At the same, if it is a builder and developer, then 43CA exposure to be seen. If some income which you have written back pertaining to earlier years as an income in the profit and loss account, please report that under clause 25 of Form 3CD under section 41 and claim as a deduction. There are many defective notices received because of this. Verification of MAT and AMT credits. Very, very important. Carry forward and brought forward of losses to be seen. And how will you report either in ITR or clause 32 of Form 3CD to be seen. Determination of provision of MAT, AMT, 56.2.7 if there is an issue of shares, 56.2.7b, 56.2.10 and 222E if any loans are given to the director of the companies or a shareholders. That is to be closely monitored. International tax compliances. Now, if there is a overseas remittances, that information gets reported in Form 26 AIS as well as TIS. If there is an export and import, then documentation to be verified. If the transfer pricing compliance is applicable, then it's documented and reporting in Form 3CEB. Documentation of a foreign exchange transaction where the value exceeds 500 crore or 50 crore under section 92D as per the requirements to be reported. CBCR reporting under section 285D. Dispute resolution matters under 144C if applicable. Very important on account of the export or imports, exchange rate fluctuations impacts to be given in the books of accounts as per ICDS 6 and the accounting standards, and especially considering section 43AA. If DTA provisions are applicable, please examine 1990 CA. And if your Form 67 is applicable, please file within the time limits. Multilateral instruments, if applicable, please consider that. GAR, if applicable. TDS returns 27Q and 27EQ to be co-reconciled with the books of accounts and the draft ITR and the tax audit reports. Form 15 CA-CB vis-a-vis the TRC and Form 10F. Exposure of 40A1, payments to non-residents. Very important, don't make a mistake of not disclosing the foreign assets and liabilities in the FA schedule of the ITR. If you don't disclose, you are exposing yourself to the Black Money Act, where the penalties on account of non-disclosure of the income as well as the non-disclosure is very severe and may result into 148 notices also. Whatever is getting reported in director's report on account of the international transactions, please examine very closely. If any TP adjustments are done, then modified IT returns to be filed under 92 CD. If soft tax filing is applicable, that is to be done. If branches and divisions are established outside the country, then the consolidation is applicable, or what is the impact of the overseas taxes to be evaluated. Check the exposure of SEP, permanent establishment, business connections, place of effective managements, especially the brand usage. Are you paying compensation? Are you deducting TDS properly or not? That is to be seen. Hedge accounting. Most of the corporates do hedge of the foreign exchange transfer to minimize the risk of outgo. So whether that is proper impacting given the books of accounts to be seen. RCM compliances as applicable on the transactions of cross borders should be seen very minutely. If any borrowings are done and the ECB compliances are applicable under FEMA, that is to be seen. If you have done the overseas investments, then the APR filing is mandatory every year electronically. FLA, FCGPR, FCTRS has to be filed if you have got any ODI in the country. Other clients compliances other than district. Auditors reporting. Audit program. Test checks to be performed using the paperless options. Significant transactions to be examined. Significant matters to be reported to stakeholders. data points to be examined to be derived from books of accounts vis-a-vis the CARA reporting, ratio analysis and their deviations and what can be the impact that is to be seen, disclosure as per the Companies Act, materiality test sampling of economic transactions, function wise and the segment wise and the nature of activity. If joint auditors are there, please examine their report. If they have adverse audit reports, then it is better to issue the separate audit report rather than merging with the main auditor. Same way branch. And if internal audit is applicable, we need to see that audit reports also. Evaluate the management risk, quality control, security authentications, appointment documents, engagement letters, MRL, third-party confirmation should be always relied upon, and that should be obtained invariably before the year end, if it is possible, or within the reasonable time before you sign the audited balance sheets. Verifications of investments, disbursement, all the whatever that is reported. Previous, if you are newly appointed, then do a communication with the previous auditors and try to get some insights from them. If IFC is applicable, see if that is to be reported based on the criteria. TDS, everybody is aware, so I'm not spending much time, but proper provision, proper reporting, every transaction needs to be reported in the TDS returns. Challans to be verified of 24Q, 26Q, all TDS returns. Investments declared by the employees to be verified for the TDS compliance under section 192B. If you have paid any interest, please correlate with the data that you are reporting in ITR as well as the tax audit report. Late fees, if you have paid, please examine. If there is any buyback of shares, whether the TDS has been paid properly or not, that is to be seen. If you have received the lower deduction certificates from the suppliers, please examine Form 13, or if you have applied, see that documents and prepare for the next financial year also. TDS compliances on account of the property purchase or a house rent paid for more than 50,000 rupees per month. Or if you have done the renovation of the house, then 194M also would be applicable. 194 benefits, if provided by the taxpayers, that compliance to be done. 194 is a big issue. It is a topic by itself, cannot be touched upon here. 34 clause reporting. Every transaction, whether you are deducting TDS or not, that should be reported in clause 34 through TDS returns to be filed. Digital virtual assets and its TDS compliance under 194S. And if it is a cryptocurrencies, then you are getting exposed to the Black Money Act. This from this year, financial year 22-23, disclosure of digital virtual assets has to be separately reported. That is to be keen. Aadhaar linking of the suppliers vis-a-vis 206 AB compliances to be done. Other compliances, which I have not listed here. If a new company is incorporated, check all incorporation documents. Director KYC, web KYC to be done after 1st April 23 up to 30th September 2023. DIR 12 to be filed if there are any changes in data. DIR 8 to be collected from the director just to ensure that there is no disqualification for the, and if there are related party transactions vis-a-vis the directors, then MVP 1 has to be collected. New director's profile to be created on MCA and even the associate DSA to be registered. If MSME supplier details are there, which you are going to disclose in the financial statements of the corporates, remember the last date is 30th April 2023. Whether CFS and standalone reporting is required based on the complexity of the layers, that is to be decided. If you can fall yourself in the category of the small companies as defined from 15th September 2022, then a lot of compliances are relaxed. You should take a explore such an option. DP 30 to be filed by 30th June 2023. If there are any buyback of shares or a forfeiture of shares, please examine that document very closely. Maximum remuneration payable to the directors, CSR contribution. It's a novel concept under the MCA. And CSR to be filed if applicable. Cash flow and fund flow analysis, directors report reconciliations. Schedule 3 requirements, allotment of shares if it is done. See the valuation reports and everything. Changes in directors, please verify their relevant record. If there is any charge created, that is to be verified. Minutes of AGM, board of directors and audit committees to be verified significantly. Verification of the statutory register. It can be maintained electronically. Manual maintenance of the statutory register is not required anymore. But it is required to be signed by each of the director for every financial year. Please take care of that angle. If there is any dividend declared by the company, either final dividend or interim dividend, please check the compliances are done properly. Fixed asset register, whether properly maintained and properly reported. Depreciation reported in the financial statements under trade line method or a written down method. Impairment of assessments to be examined. Verification of any special resolutions. Secretarial audit if applicable. MR3 of the earlier year to be examined. Annual returns. You prepare the draft compilation of the annual returns. Other specific allowances. PF returns to be verified. Challans to be verified. Registers to be verified. And if employees have opted for not availing the PF benefits, please check the declarations. Gratuity valuation report, which we get it. Please correlate with the PF and ESIC register, whether all employees are considered in that gratuity valuation report or not. Profession tax compliances vis-a-vis PF and ESIC. Number of employees reported under the Factories Act or the shop and establishment vis-a-vis the register maintained, whether they are same or not, that is to be seen. Appointment documents. If PF UN numbers are allotted to the new employees, that is to be seen. PF ESIC dues we have already covered in the income tax. Other compliance like staff PT returns to be seen. Aadhaar linking has to be completed before 31st March 2023. And if that is not done, will it expose any ramifications on GST registrations, IC codes, or any other registration that you are having under the different laws, profession tax or a director, KYC, DIN numbers, everything. Only date which has been extended to 31st March 2024 is the election identity card linking. But other date is not extended as of today, as we speak. Selection of old tax regime vis-a-vis the new tax regime. Application for opting in and opting out for composition scheme to be executed before 31st March 2023. IC code revalidation if applicable. Any other FEMA compliances other than what we have listed, especially if there is a late realization of the export dues, please take a permission, file the application through AD for realization such a dues. ITRU, that is updated return to be filed on or before 31st March 2023 for the financial year 1920. GST returns filing frequency to be considered. Nomination facility if not opted till now. Advance tax, if you are not paid till now, please pay before 31st March 2023 so that you save the interest under section 234B. No CLAR, if it is applicable to a limited entities only, but we may prepare ourselves for the applicability of such a provisions in future, because in future that limits may be reduced or applicability may be expanded. So that is to be seen. Stock of companies transaction if you are having, then please examine very, very closely. If you have to invest in the 54 EC bonds, then please invest as per the time limit available. BIS reporting if applicable. By requisite amount of stamp purpose if needed. Faceless. Can we see more faceless GST compliance? Can we see in future more online GST audits? BRSR reporting if applicable. Related party transactions scope has been expanded under the Companies Act. So be geared up for such a reporting. Be very, very particular. If any license are obtained by the entrepreneurs or businesses, please review whether they are getting expired or not. Other compliances other than listed above. Let me reiterate here that I'm not here to prove myself today on this intricate topic, but certainly imbibing from my interactions with the participants digitally. Oh, this session is digital, I can't interact much, but by doing this particular session, I have improved myself a lot. I always say surround yourself with the people who talk about the vision and ideas, not the people. I appreciate all of you. And last but least, let me say again, as per the brief given by the organizers, either I was supposed to confuse or I was supposed to convince. If I have convinced, the credit is with them. If I have confused the people, then the blame should come to me. Thank you. With this, I hand over charge to the organizers.
Thank you. Thank you so much, sir. I think that was a marathon that we have been running, and this was maybe my first experience of having such a fruitful session wherein so many diverse topics have been handled in a single session. I'm sure all my co-participants will completely be in agreement with me that they have never been witness to such an wonderful session wherein not only GST but income tax, PAVSI, RBI, international tax, everything has been discussed threadbare. And I think this is also kind of a alarm or a reminder call for all of us to just some of the things when you're discussing. I remembered, oh, I forgot to do this.
Correct.
So maybe
Happy to take any questions if there are.
I need to pick. So yeah, sir, can you see the questions, sir?
I can't see the questions, but if you can read it out, that will be great.
There is one question, sir.
Yeah.
If it's posted by Rajiv Chheda.
Yeah.
So if RCM is payable for labor charge, works contracts, survey work, labor like. Could I post?
Hello.
Hello.
Yeah.
The question is if RCM is payable for labor charge. Bracket 1 works contract and survey work labor.
So I think Rajivji's question is regarding 9.4. I think whether when you are making payment to a labor for labor charge, whether RCM is payable, because under 9.3 RCM is not payable for labor charge. So maybe you want to understand that.
If the labor is provided through security agency, then the RCM would trigger. But if it is a direct payment made to the laborers, then probably RCM will not trigger because that was applicable only till 12th October 2017, subject to limits. Hello.
Yes, sir. Lakshmanji, any other question?
No, there is no another no question.
There is one question, sir. By Padmanathanji. He has touched upon an amendment proposed in section 23, wide section 131 of Finance Bill 2023. He is asking if you can just touch upon this aspect as well.
So that has been already discussed, no? That exemption is provided now. We have already discussed that particular part, I believe.
So this was at the start of the session. So it has already been discussed.
Yeah.
Here some questions have been posted. Here Rajesh Mangal is saying that question is posted to directly to Nitin ji or Rinav ji. So sir, you can check.
I'm not able to see any questions.
Same. I'll just check.
So I'm taking next question. What would be the reply if SCN issued on the bona fide supplier in case the recipient is allegedly bonus dealer? Penalty under sections 122, subsections 1, clause 2.
So if it is if the supply is alleged as a bogus dealer, then you got to prove whether that supply is actually bogus or not. So, and you got to see whether the notice has been issued with reference to the input tax credit, or they have issued with reference to another, which section. That will decide how do you defend that particular matter.
Sir, so the person who has asked this question is saying the recipient is allegedly bogus.
Recipient.
Bogus dealer. Yes. Recipient is a bogus dealer.
Yeah. Nitin sir, I'll just give a briefing about what is happening. What are the notices we are getting?
Yeah.
Say, ABC Private Limited has sold some goods to X Limited.
Okay.
Now, suddenly ABC Limited gets a notice from the department saying that X Limited, to whom you made the supply, is actually a bogus company.
Okay.
Correct.
Okay. So it's actually a paper transaction. Done.
Hello.
So that is a question. So this is not in the scope of today's discussion.
No,
yeah, but
it's
yeah,
not
still,
part of the today's episode anyway.
But
if
yeah,
it is, see, ABC has raised the invoice on X Limited. Am I correct?
Yeah.
So they have raised the proper valid invoice.
Yes.
Yes.
They have issued the invoice with the proper e-way bill, if applicable.
Yeah.
Correct.
Yes.
They have a proof of dispatch of goods quantitative wise as well as the price wise.
Yes.
So transaction of outward supply for ABC is genuine.
Yes, that is genuine.
Correct.
Yes.
What X Limited will do, it is his problem. You have already collected the money and you already paid.
Right.
So there cannot be double demand of the tax. Let us extend extend the transaction with the 4 parties: A to B, B to C, C to D.
Yes.
ABC has done compliances properly, but D has defaulted.
Right.
So the recovery will lie with the D, not with ABC.
Yeah.
I'll give you one more example. E-way bill has been issued.
Yes.
For a particular value, or e-way bill is not issued. Let us take an extreme example. E-way bill is not issued, but the invoices are issued under section 31. There is no movement of goods, so there is no requirement of issue of e-way bill at all. No. Let us take the case of a circular trading. Hello.
Yes, sir.
Yes, sir. Yes, sir.
So if there is no movement of supply, invoicing is permitted, no? We have to fight, because for every stage of the transaction, government has get the tax. A will pay the tax, B will claim the input tax credit, B will bill it to C, he will claim the input, then they will pay the difference of tax. So ultimately, who is the defaulter, that is to be seen, no?
Yeah, because these are the new set of notices that are being received now. That the recipient is bogus.
You got to fight based on the facts.
Yeah. Right, sir. Right.
Though it is out of syllabus question.
Correct. It is out of syllabus.
Right. And sir, Mr. Mahendra Jain has a question, he says that his invoicing is applicable from 1st April 2023. So can he voluntarily now make the application at this stage? Or he has to wait for 1st April?
If he wish to make, he can do it. But technically, according to me, there is nothing called voluntary. But in future, we can anticipate the turnover limit to be reduced to 5 crores.
Sir, there is one more question by Mahendra Jain again. If I want to opt out from composition scheme from 1st April 23, do I have to apply on 1st April or I can apply today?
If you want to opt out, you have to do it on 31st March, no?
Before 31st March, correct.
The date is CMP02, if I'm not mistaken. Am I right?
Correct. So it is to be filed before 31st
31st March,
March itself.
yes.
Yes, sir.
Yes, sir.
There is one more question by Ruchika Tendulkar, madam. If GST of March is paid in March itself, can it be allowed as deduction for 22-23 following cash system?
It depends what kind of a method of accounting you are following. If you are following
Cash system.
cash system, I'm talking about whether it is inclusive method of accounting or exclusive method of accounting.
Correct.
If it is exclusive, where is the question of deduction?
True. Okay. There is Rajesh Mangal Agarwal ji. He wants him to unmute. If you allow, I will unmute him. He wants to ask his question directly.
Please.
Just a minute.
I hope he doesn't want to ask me a difficult question.
Yes, Rajesh.
Yeah, Nitin sir, first of all, many thanks for this marathon and very important, nice session. Congratulations for that.
Thank you, sir.
And I have 4 questions, little small questions. First of all, this option for GTA, that is over on 15th March.
Yes.
So I think if anybody left over, then he can very well manually also apply the jurisdictional authority before before issuance of first invoice for the year 23-24. What's your take?
It is electronic, sir. No, there is nothing called manual anymore.
So suppose one person miss out, then what is the option right now?
No, so if we miss out, the recipient will pay under the reverse charge. Because
Sir, this liability, this input credit is too much, 12%. Before that, in financial year 22-23, he is already in forward option and charging 12% of GST. If suppose for any reason he has missed out now, then what is the way out to take this issue invoice?
You can probably approach the commissioner, and if he grants you the permission, you may get it. But to my understanding, it was supposed to be exercised before 15 March.
Okay, true. Second question is, during your deliberation, you have discussed that if we issue the financial credit note, then ITC to be reversed. Can you throw some light?
Sorry, come again?
During your deliberation, what I understood, if we issue financial credit note, suppose the time out, we have crossed that time limit of November, 30th November, and suppose we have to issue some credit note, then and we are issuing financial credit note.
Correct.
Then what I understood, you have told during your deliberation that we have to reverse input tax credit. Yes. Am I correct?
Correct.
So why to reverse the ITC, sir?
So for example, why are you issuing the credit note? Let us understand the reason first. For example, you have supplied 1,000 bags. Okay. And party has rejected 500 bags. Time limit of 30th November is over.
Okay.
Correct?
Okay.
So on that 1,000 bags, you must have cleared the input tax credit.
Correct.
Correct. If you are issuing returning 500 bags, then you got to reverse that ITC of that 500 bags. That is the reason. So instead of issuing you got to issue. You have to go to probably you may work out something like a sale invoice or whatever the practical solution is that you can adopt to use. But credit note will be a risky proposition in my understanding.
But Nitin sir, you see, we have to issue that financial credit not 100% of value. Suppose we are giving that financial credit note 100% of value. Suppose that whatever you take that amount to 8 lakh rupees plus 2 lakhs rupees GST, total 10 lakhs. The purchaser will take 10 lakhs rupees financial credit note. If we issue 10 lakhs rupees financial credit note to that person and simultaneously, if we reverse that ITC, then it will.
No, in that case, you got to reverse only that you 8 lakh rupees. 2 lakh rupees you will reverse as a ITC reversal with the interest.
But that part, that person cannot get that benefit.
He will not get the benefit. No, sir. He will not get the benefit. No, that is the issue. No, sir. That is the issue. See,
Okay.
you have consumed only 500 bags. 500 bags you have not consumed. Can you claim the ITC on the 1,000 bags?
Yeah. Correct.
Please understand very clearly.
Yes. I got it. And third point is the goods rejection. Invoicing dated 28th March, party receipt on 5th April, and rejection, he gave his rejection assent on 50th April.
Yeah.
And you have advised that we have to accommodate that rejection in March month itself.
Yes. March GST or 3B, you will reduce the your sales according to that value.
Correct. So we have issued on 28th March e-invoice also. So for nullify that e-invoice, whether we have to issue one credit note in April 23?
No, you have to issue that credit note dated 31st March only. In your books, the impact will come on 31st March only.
Correct. And in GST portal, how to deal with that?
In GST portal, it will get auto-populated in the month of April 23.
No.
Because your GSTR 1 of March 23 is already filed.
Correct.
So when that will get auto-populated in April 23.
April 23, GSTR 1.
Yeah. April. Okay. So there you can delete that particular credit note.
Correct. Thank you, Nitin sir.
Sir, Mahendra Jain ji has continued his question again about opting out of the composition scheme. What he's saying is that 31st March is the date for opting in for composition scheme. But for opting out, we can apply anytime, that is even after 31st March. Is it correct?
What I said, if you want to opt in or opt out, that is to be done before 31st March. But say he wants to opt out from 7th April next year. So for 1st April to 7th April, he will be in the composition scheme, and 7th April onwards, he will be in the regular scheme. So in that case, he has to file composition return, he has to file the regular return, either GSTR 1, 3B, and he has to file 9 and 9A for the next financial year accordingly. So if you want to continue in the regular scheme, it is always recommended to opt out from as on 31st March.
Okay. So his question specifically is, if he wants to opt out from 1st April, he has to file the form today or on 1st April. That is what his specific question is.
If he wants to opt out on 1st April, then for one day, he is into the composition scheme also, no?
Correct.
It is even for 1 minute, he is there in the composition, whether he does on 1st April or he does on 31st March. 31st is better, no? He doesn't have to file the nil return, no?
Correct. Okay. And about Ruchika madam's query.
And sir, I would also like to add here that, that annual return also becomes easier if you opt out by 31st March.
Yes.
About Ruchika madam's query for the payment of GST in the month of March itself, she has commented that the method of accounting is inclusive of GST that they are following.
If it is inclusive, then that is like you are debiting the GST payment to the profit and loss account, no?
Yes.
That will be permitted. She is asking from the income tax perspective.
Correct. Yes.
That will be permitted. I don't see any challenge if that is the case.
If it is paid before 31st March.
But just to claim the benefit, she should not convert from exclusive to inclusive. In that case, she has to report as a change of accounting policy and the impact on the financial statements also.
Yes. Okay. So I think the questions are done with. I hand over to Arupji for the further. Yes, sir. Arupji.
Yeah, I think Ruchika ma'am has got the reply to her query that she's asking whether it will be considered as tax paid. will it be considered as tax paid if she pays it by 31st March?
So
I
it is,
think, yeah.
depends on
Yes,
the
sir.
facts, no?
So her question is
So
basically
thank you.
whether tax paid in a cash
Yeah.
ledger, because the return will be filed after 1st April only. So
Right.
whether cash paid in electronic credit cash ledger as on 31st March will be allowed as a deduction or not.
Offset, if offset can be done on 31st March, it is an expenditure.
Offset cannot be done because the return will be filed on 1st of April.
Yes.
Yeah, only
Yes.
after first.
Yes. That is the catch.
In fact,
So anybody,
thank you.
I don't know whether anybody will file GST or 3B on 1st April.
नहीं सर वो तो 14th के लिए वेट करना ही पड़ेगा
हाँ
for the ITC.
It is one's own choice.
Thank you very much, sir. Thank you. And I think with the kind of queries we have been getting, and I think in the number of people who have been glued to the screen, we can only say that it was a marvelous session. So now for the formal vote of thanks, I would request Nishan ji to
Thank you, Arup ji.
offer thanks to Nitin sir.
Thank you. Thank you, sir.
Thank you, Arup ji.
Nishan ji,
Good evening, everyone. On behalf of CGPI, I take this opportunity to propose vote of thanks to CA Nitin Bhuta ji on this beautiful seminar on the whole Gamut of year-end finalization. I stand here today not just as an audience, but as a proud and grateful student to express my heartfelt thanks to Nitin sir. We meet this. The presentation is actually like a ready reckoner checklist, and that presentation was made with such a short notice. I mean, Nitin sir, the only thing I can say that we promise that this year's end shall neither be an end nor be a beginning, but a going on with all wisdom that you, Nitin sir, has instilled in us with this presentation. I also have a special thanks to the organizing committee and all the members for their unflinching support. Once again, thank you, Nitin sir.
Thank you. Thank you.
And with these warm words, we move to the end of today's seminar. Thank you.
Thank you. Thank you.
So, like, we can't end the seminar without really expressing our deep gratitude to all the participants for being here and also on the YouTube. It was really a pleasant session only because you were present continuously, because, you know, our speaker is really encouraged when he sees that so many people are getting benefited from whatever he's deliberating. And Nishan ji actually added a wonderful thing that this presentation was made at a very short notice. So I think that was really wonderful. And so keep coming to our seminars. And we would also like to share with all of you that there is a wonderful news that we are having a custom specific series in the next month. So if you have already not joined, please do join the series. You know, all the details are given. And in case you need any further details, you can always get in touch with any one of us. And I can assure you that this basic course on customs is going to be an eye-opener for many of us, because that's a new area where many of us are to start. So I would not like to end the session before thanking Rina, all the behind the scenes person. So I thank you, and with gratitude to Nitin here. Nitin, what you to have? Nitin sir, you want to share anything?
No, nothing.
Nitin sir,
I have tried my best to confuse the people.
okay.
Thank you. Thank you very much.
So thank you everyone, and thank you. Yeah, thank you everyone, and have a pleasant evening ahead.
Yeah. Thank you.
And let's keep it to the custom you're going to have in.
Wishing everyone a happy year ending.
Yeah. Yeah.